Joe Fox, we keep hearing that individual investors are leaving the market. As the CEO of an online brokerage company, what are you doing to get them back?
Well, Ditto Trade's a little different. We're a social investing brokerage firm. We, sort of were born out of the market turmoil of '08 with the idea that the individual, because of the erratic nature of the market, if you don't have time to fully be engaged in the market, you should stay out of the market. That's a different type of approach for an online broker. You should stay out of the market unless you have someone to ditto. And what that means is that you could actually, with Ditto Trade, attach to the trade of someone you trust. So it's about leveraging these trusted existing relationships and automating them.
Speaking of trust, a lot of people's trust was broken with that Facebook IPO. A lot of people say that's the final nail in the coffin. You had the flash crash, then you had this Facebook IPO. So what's your view? Was it really the final nail in the coffin for individual investors?
The nail has been driven into the coffin for some time now. It was a big problem. Unfortunately, a lot of people got stuck waiting to find out what the fill price of their order was. So nothing worse than having control loss on a trade. What we did as a company, nothing to do with technology, even though we have that, we basically said all the people that have limit orders that are above the current price, let's push their trades in there, even if without a fill number, to know what their prices were so they can control it. People were able to control their losses, or in some cases found out after they sold it at 41 that they paid 40. And most companies wouldn't do that, but service sometimes has to trump technology. That is an issue. Bottom line, if you're not in the market full time, probably should stay out of the market unless you have someone that you trust that you can ditto while you're a teacher or a dentist.
So one of the ways that you're differentiating yourselves is through social investing. Can you expand on that a little bit?
So
it's all social nowadays.
Yeah, but it's not like it's not like a social network where everyone's on an even playing field. It's about having someone or a relationship you trust. It could be a newsletter, it could be like Jim Cramer, it could be an uncle or even a registered investment advisor that allows you to actually connect to his trade. So when he makes a trade, you're not just making a mirror trade after the fact. You're participating in the actual trade he's making, getting the same price. Yet at any time, you could take control of that transaction with the click of a button and then do whatever it is you need to do to it. What we find, most people are staying fully connected, letting that play out by their friend, their uncle, that advisor, Kramer, and that's what makes the difference. Above that, if you don't want to connect to the actual trade, which is extremely unique and proprietary, you can get an alert. Hey, I just got an alert from my uncle, he made a trade, do I want to make the trade? Well, I'm drilling some kid's tooth now. It makes it a binary decision, trade or don't. I could hit trade, put my phone away, and I just made the transaction. You preset your slippage, make my trade a market order when I get my order from Uncle Bob, or add a nickel, or whatever it may be. So if you can't do this socially, if you can't leverage someone's experience and all this trust, then you should stay out of the market. And people are going to continue to stay out of the market, at least for another couple of years. And the Facebook thing, unfortunately, I'll give you an interesting little tidbit there. The lead traders that we have, for the most part, I don't believe any of them traded Facebook because they knew it was hectic and they saw what was going on. The NASDAQ reported quickly of their problems. A week and a half later, I get a call from the guy that runs my program, the lead trader program. He goes, hey, Joe, guess what? One of our lead traders bought it at 27, sold at 29. I go, oh, it's great, wonderful. Oh yeah, and isn't it wonderful that a mother-in-law could actually make that transaction? I go, that is kind of cool. He goes, no, Joe, your mother-in-law was connected to that lead trader. Forgot that a year ago I connected her, small account and all. But the point is, my mother-in-law, who hasn't invested since the 70s, would never have been in the market if it wasn't for this kind of a technology and this kind of a company, Ditto Trade.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to